Greetings to everyone. I am Pratap here. Today is 13th December 2023. This is going to be a very interesting lesson because we are going to learn so many different topics because there was a lot of trading activity in today, and we have seen aggressive trades. We have seen trades from the bear traps. We have also seen some trades we planned previously, they were executed in a successful way. And we have also seen some of the zones, how nicely they violated as per the discussions we had earlier. And today we are going to see some of the interesting examples, some classic examples, I can say, classic examples related to zone violation. So this is a very interesting session. Let us focus a lot on the analysis part in today's session. Even before that, if you are attending this video first time, if you visited our channel first time and watching this video, please understand that we are providing a free training on supply demand zone price action theory. The complete training we are providing, and you can access all the training videos from the playlist supply demand zone price action course at our channel. And starting from lesson 1.1 until the most recent lesson, you can access all the videos. Even all the upcoming videos also will be placed under this playlist. And I am also providing the link to this playlist in this video, in this YouTube video description. So you can also access the link. And also our Telegram channel is also, the link is provided in this video description. In case if you have not registered, so please register in our Telegram channel so that you will be getting notifications each time when we publish the YouTube video. So now let's get into the analysis part. We are analyzing the high liquidity zones generated in our yesterday's report. And if you look into Nifty, still we didn't have any proper direction on the daily chart. So let's get into the first stock generated in our yesterday's report. This is the daily high liquidity zone, Ashok Leyland. So we have a daily zone. Inside the daily zone, we have identified 75-minute zones. So let me go to the 75 minutes time frame. So here we have a 75-minute zone and we already fine-tuned. But recently look into this recent price action. There is a huge drop candle and then we have a base candle and we have a leg out. This is looking like again a very big 75 minutes demand zone, but actually this is not the base, base candle. This is not the base candle. This is also a leg candle, ERC candle. But when you have such kind of interesting structure, there could be higher chances of executing the orders at the lower time frame. This is the first point we need to observe. This is the first clue for planning our aggressive trade. When you have such a huge rejection, definitely there will be some good 15-minute zone or 5-minute zone. So that is the reason why I went to the 15 minutes time frame, and in this 15 minutes time frame we have identified a zone. We have this is not a drop candle because we have a huge rejection. You can also consider this as a rally candle. Theoretically it is looking like a drop candle, but technically this can be treated as a rally candle. And then anyway, this is a failed ERC candle. Failed ERC candle can be used as a leg-in. And after that you have a base candle and then you have a rally candle, follow-through candle, one more follow-through candle. So we have identified a 15-minute zone. But remember, this is not inside a 75-minute zone. Directly in a daily high liquidity zone, we are identifying the 15-minute zones. And when you are trying to plan your trades directly on the 15-minute zones, most of the times those 15-minute zones will fail. That is the reason why the strategy we clearly define. Inside the daily, you have to go to 75. Inside the 75, you have to go to 15 minutes. But you have also seen there are times we are ignoring the 75 minutes and directly we are going to the 15 minutes and taking the trade. Such kind of trades we named as aggressive trades. And when you go for such kind of trades, when there are price action clues, then only you can go for the aggressive trades. Otherwise, it is a dangerous trade. So we already have some price action clues. The first clue itself is the huge rejections. That itself indicates a huge institutional order flow. That way we identified this zone could be having some trading opportunities. But still this clue is not enough. And moreover, we need to fine tune this zone, right? So for that what I did, I went to 5 minutes level. And in the 5 minutes, let me open the, yeah. Now look into the 5 minutes time frame. See at the near the distal line of, near the proximal line of this 15-minute zone, we identified the 5-minute zone. We have a rally, we have a short candle base and again a rally candle. So what you can do to minimize the risk, you can adjust to the proximal line of this daily demand zone, daily high liquidity zone. This is the way. That means instead of keeping your entire zone like this, you can place like this. That means at the proximal line, you can plan to take a trade. There are two advantages. One advantage is your risk is minimized and also we are ensuring the prices are entering into this zone. Okay, this is the way, this is for minimizing the risk so that we are ensuring this 5-minute zone is there inside the 15-minute zone. Okay, but this is not enough. We need one more price action clue. So for that, you look into, let me go to 15 minutes time frame. See here, recently prices were approaching near to this zone, daily zone, and then they were moving back. When it will happen? When there could be some entry buffers before this high liquidity zones. These entry buffers will ensure next time when prices violate this entry buffer and get into this high liquidity zone, there will be higher chances for the immediately available zone. Same thing we discussed earlier also, and we have seen some successful trades earlier. But do we have any entry buffer here? Mostly there are two ways. Entry buffers might be there at the lower time frames, some zone might be there. And also one more thing, previously I told you, a new way of drawing the zones when you have two leg candles. See, this is a leg candle. We have another leg candle. How you draw? From the low of this leg candle, lower wick of this candle to the higher wick of the previous. This is the way you can draw a zone. See here in this zone how it is respected, price is respected and moved up. But this concept is not as per demand and our regular demand and supply zone concept. Our concept is based on institutional imbalances. We need to identify base candles. When you draw a zone like this, most of the times, if you go to one time frame below, definitely you will find some zone inside this area. Let us check. Previously also once I gave an overview about this concept, a new way of drawing demand and supply zones. At the time also we have seen a success in the trade. But don't think that every zone will get success. Only near high liquidity zones or inside high liquidity zones, if you have such kind of observations, they will have success. Anyway, here we get success because there is an entry buffer concept we already defined. And now let me go to 5 minutes and we will check one time frame below is 5 minutes. Let us check whether there is any zone is available. See here, we have a zone is available. We have a rally candle. We have 3 base candles, a rally candle. Now what we will do, we will adjust this zone properly like this. Actually what we did, we took 2 leg candles and we draw the zone in the 15 minutes, and when the moment we moved to 5 minutes, we were able to identify a zone. And this zone is acted like a entry buffer. See here, previously prices entered, after that a little deep inside, and finally today prices before it is violated, see again the entry buffer, again it pushed. Maybe by this time the order flow is weakened, the push is not very great. But the moment it is violated, most of the supply has been consumed by this entry buffer. Why our zone in the high liquidity, the immediately available zone, even though it is not inside the 75 minutes, why it will get success? The reason is, before prices enter into our high liquidity zone, the pending orders in this entry buffer area would have consumed the supply. By the time prices entered into this, the supply is weakened. So this is the price action clue. When we have such kind of entry buffers before the zone, we can go for aggressive trades. The reason is, by the time the entry buffer is violated, most of the supply might have been consumed. And now what will happen? The pending orders in this 15 minutes area or the fine-tuned 5 minutes area can push the price up. That is what happened today. See, it entered into this 5 minutes area, we fine-tuned inside the 15 minutes area. Got the first entry, pushed the price, again came, maybe the supply is, some more supply is there again, maybe a new supply might have been introduced by institution. That's why we have a rally, base and drop. Still that entire supply has been consumed by the institutions. Institutions added again a new orders here, drop, base and rally. See how explosive it is. And then a follow through candle and reached the 15 minutes target. See, this is a 15 minutes. We have a drop, base and drop. And that way Ashok Leyland has given 16,000 rupees profit, which is 7.4% ROI, return on the investment, per one future slot, because I am calculating ROI as per one future slot. So this is the way the aggressive trade is a successful trade. Because most of our aggressive trades are successful, the reason is, without price action clues, we are not taking aggressive trades. If the price action clues are strongly supports, then only we are going for aggressive trades. So this is the first stock from our yesterday's daily zone, demand zone, and the next one is Astral. And we have interesting learning here. One is the learning from this stock is about the zone violation. Because we know when a zone will be violated. Here the rule is simple. Anyway, this is a daily demand zone. Inside this daily demand zone, we have identified a fresh, sorry, it is not fresh. We identified a 75-minute zone. Sorry, this is a daily zone. Inside we identified a 75-minute zone. This is the 75-minute zone. Here we have a drop candle, either you can consider this or you can consider this ERC candle. That way I have drawn this zone, and inside this 75 minutes, I identified two 15-minute zones. Let me get into the 15 minutes time frame inside the 75 minutes. So this is the 15 minutes time frame. Inside the 75-minute zone, we identified two excellent 15-minute zones. One is we have, see here, we have a ERC candle, then we have a base candle, and then we have a rally candle. Further, I fine-tuned this area with 5 minutes time frame. So this is also a 15. We have a rally, we have 3 base candles, and we have a rally. That way we can consider. Another way is this, you can consider the middle candle as a ERC candle. Either way. Or if you are not convinced this is ERC candle, you can take all the 3 candles as a base. Anyway, either way it doesn't make any difference. And what happened recently? Prices entered into this zone, the first 5-minute zone. When it reached this zone yesterday, Monday, today is Wednesday, right? So Monday it reached this zone and it gave a very good profit. Excellent profit it has given. And after that, today, that is today again, prices entered into this zone. In just 115 minutes candle, this entire zone is gone. Why it has happened like that? Because it is already a tested zone, this 15-minute zone. That is the reason why we are always looking for fresh zones. Fresh 15-minute zone inside the 75 minutes time frame. If that 75 minutes is inside the daily zone. See, always look into this hierarchy. From daily high liquidity zone, we are going to 75 minutes and fine-tuning a 75-minute zone. Inside the 75, you may find multiple 15-minute zones. So one by one we are taking. If it is a fresh zone, we take only one entry. If it is not a fresh zone, we don't take second entry in the 15-minute zone. And when we go for second entry on the same day, if the prices are entering, mostly we take. Same day is allowed. The fresh zone is prices entered on the same day. Again, second time prices came, mostly it will work on the same day. But in a different day, if prices are entering, mostly the zone will fail. This is one important point you have to observe. And second thing, when this 15-minute zone will give multiple entries, if it is a high liquidity zone. Again, if 15 minutes is also a high liquidity zone, which is inside the 75 minutes, which is inside the daily. The hierarchy, we won't take any deviation. When we take deviation hierarchy by bypassing the 75-minute zone, if that 15-minute zone is an aggressive trade based on some price action close, that is what we have seen in the previous stock Ashok Leyland. Except those scenarios, but most of the scenarios, we always look inside the daily, we look for 75 minutes. Inside the 75 minutes, we look for the 15 minutes. Inside the 15 minutes, we look for the 5 minutes. This kind of analysis is called top-down analysis. Generally, you do top-down analysis starting from monthly, but for our high liquidity zone, whichever the time frame it is, from there we start our analysis, we will go down. Mostly why we do top-down analysis? Mainly for 2 reasons. One reason is to reduce the risk. And second reason is to find the possibility of violating the zone. The zone violation we are able to identify. based on certain rules we already discussed earlier. Again, today also we will look into that, all those rules, because today most of our zone violation rules are there in different stocks. We have different zone violation rules. For satisfying all these zone violation rules, different stocks are executed today. That's why I said a lot of learning from today's session. See, because this is already tested, we avoided the trade. And we waited for the 15-minute zone below this. But see, prices didn't enter into this. Before itself, the prices were moved up. That means in this area, there is a very strong order flow is there. Next time again, prices enter into this 15-minute zone area, definitely we get a success. But generally what we do, we have to delete the moment the zone is violated. Just for our today's session point of view, I kept this zone, now I am deleting. So next time when we want to trade in this stock, we have to wait prices enters into this 15-minute zone, which again we fine tuned at 5 minutes level to reduce the risk. Let me show you the 5 minutes, the one I fine tuned at 5 minutes level. See here, we have a leg in as a ERC candle. This is a failed ERC candle. And after that, we are using 3 candles. 3 base candles, and then we have a leg out. So this is the 5-minute zone. And it is a fresh zone. Moreover, this 5 minutes is a fresh zone. 5 minutes or 15 minutes. Because this 5 minutes is inside 15 minutes. Prices haven't entered into this. Even today the prices did not enter. Even the 15 minutes time frame also it enter. Because sometimes we may say the 15 minutes might have been tested. If that is the case, next time the 5 minutes doesn't work properly. See, this is 15 minutes time frame. You draw 15 minutes level. We have a ERC candle, we have a base candle, we have a leg-in. Okay, now this is a 15 minutes I have drawn from wick to wick. Just before this 15 minutes zone, the prices turned up. So that way prices did not reach inside. Okay, this is about Astral. So you will get an opportunity soon in this stock. And the next one is Balaram Chini. And remember, today I have given an exercise on this stock in our Telegram group. Hope you have done this exercise. Check your answer. Whatever the question I asked, now check the answer. So what is the question I asked? This is the 75-minute zone. First, let us start our discussion from daily time frame, because this is a daily zone. We have a drop, base, and rally. This inside this daily, we have fine-tuned to 70. We have fine-tuned the 75-minute zone. So let me go to the 75 minutes time frame. In the 75 minutes time frame, we have a leg-in candle, 3 base candle, and then we have a rally candle with a gap. It's a pro gap. So everybody will think this is an excellent zone and definitely it will work. You know, most of the people, what they do, they directly take an entry here in the 75-minute zone. See how beautifully the structure is looking like. This is one of the reasons why many people fail in getting good returns in stock market, especially when you are using supply demand zone price action. We already developed a skill to find when a zone is going to violate. Probably this is the 4th video or 5th video. We are discussing about when a zone is will fail. But today we are discussing several examples today because we have seen different scenarios in different stocks. Previous stock we have seen. In Astral, one of the zone that because it is already tested, it is failed. But here, it is not already tested. This is the first time prices are entering into this zone. Previously, prices were near. There was a rejection. Why there is a rejection? Because in this professional gap area, institutional pending orders are there. So that's why prices were entered into that gap area and then moved up. That way they have given couple of time. It has given opportunities in this stock. But today prices are entered into this zone. First time they entered into this zone, the 75 minutes area. So what is the question I posted in our Telegram group? In the 15 minutes time frame, we moved to the 15 minutes time frame. In the 15 minutes time frame, I shown you this 75 minutes structure. What is the question I asked? What is going to happen to this 75 minutes? You know the answer. That is what I asked. Why I said you know the answer? Because we already discussed earlier. The structure, the price structure, the 75 minute structure is amazing. But the moment you moved into the 15 minutes, you are able to see the real structure of the prices in that zone. When you have such kind of base candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. When you have these many base candles, do you think the zone will be executed? It won't be. That's why today see what happened. The prices went to the distal line of this particular zone. Actually just 5 rupees below. Again there was a rejection. Why there is a rejection? There is a different story for that. Actually this 75 minute zone would have been violated today. But something just below that 75 minute zone, we have a 5 minutes high liquidity zone is there. Let me show you. Let me delete this 75 minutes. Now you will get clarity. See here, we have a drop, base, rally, and a follow through candle. See, the first prices came. Again, how it pushed the prices up. See the rejection. Again, next time, every time the rejections are coming, the moment prices are entering. Again, here, third time. After that, see how much the prices moved up. Such a strong price action. Same thing today also. See the rejection today from this zone. But only problem is the prices were not able to move until this 15 minutes area from this demand zone. The reason is today the supply is also very strong. The supply is also very strong. See all these candles. But even we have such a strong supply, still this 5 minutes is able to control the prices. Because of this 5 minutes zone, which is there at the proximal line of this daily zone. This entire zone is a daily zone. At the proximal line of this daily zone, institutions kept a 5 minutes high liquidity zone. Their real order flow is there inside this zone. Probably if institutions add new orders tomorrow, definitely these prices will be moving further up. It's all depending on the institution's play. If again if prices are going, still if institutions' orders are very strong, once again we can see a rejection. So these are all some important observations you have to make. You may ask a question, is it a bear trap? No, it is not a bear trap. The reason is this is there inside the zone. The bear traps will be there outside the zone, below this zone. Why below this zone? Because the moment prices, this zone is violated, what happened? Most of the traders, their stop losses will be triggered once prices violates this distal line. Because that stop loss is triggered, what they do? They will start selling their stocks. What institutions will be doing? They keep on buying below this zone. That way they get the liquidity. All these stop orders, whatever are there, all their orders will be consumed by the institutions. And some people, they do an approach called breakout approach. When a zone, something is broken, immediately what they do, they go for new short orders. We call them as a breakout traders. Even their orders also institutions will consume. Because all these are all short orders, that means bears. And all these short orders are trapped, that means bears are trapped. That's why we call it as a bear trap. If it is a supply zone, we call it as if the supply zone is violated. Above the supply zone, if institutional trap is there, that is called bull trap. But this is a demand zone. Below the demand zone, whatever the orders institutions are consuming, we call them as bear trap. So those traps will be there below this zone, high liquidity zone. But this 5-minute zone is inside the high liquidity zone. So that's why we cannot call this as a trap. This is just an high liquidity zone, 5 minutes high liquidity zone, which is inside the daily high liquidity zone. So when you have a high liquidity zone, what is the advantage? Directly you can take a trade. There is no rule that high liquidity zone should be there inside a 15 minutes, that should be inside the 75 minutes. There is no such rule for high liquidity zone. If you are able to identify a high liquidity zone, 5 minutes high liquidity zone, inside the daily zone, directly you can take a trade in that 5 minutes high liquidity zone. The moment prices enters into that area. So that is the reason why we have seen a rejection from this area. But otherwise, the 75-minute zone is almost violated. And we already predicted the zone does not work by seeing the price action inside that particular 75-minute zone. This is the way you have to identify when a zone is going to be violated. This is the second scenario we have seen. One scenario we have seen in Astral, already tested zone. Because it is already tested, the lower time frame zone, so that is violated. And in this scenario, the 75-minute zone is almost violated because the structure of that particular, the price structure inside that 75-minute zone is not at all good. That's why we predicted. Now we'll see one more interesting example. We'll see the next stock is a Tata Steel, and we did not get an entry today. This is a 75 minutes or daily zone. Tata Steel we did not get, and Canara Bank Canfin. And this is a daily zone, daily supply zone. We have a drop, base candles, and a drop. See, we have another interesting learning from this stock. Even though the prices did not enter into this, so we identified a fresh 75 minutes inside. We have a rally, we have two base candles, and we have a drop. So this is looking like a very good 75-minute zone, right? Because most of the people, they think like that. Those who doesn't know when a zone fail, because many people are not aware of when a zone will be violated. But those who know this concept, you will not you will not feel happy by seeing this structure. What we do, we again go one more time frame, that is 15 minutes time frame. So go to the 15 minutes time frame. See the structure of this zone. The structure is not at all good. All these base candles. We have a rally candle 1, 2, 3, 4, 5, 6, 7, 8. So when you have such kind of structure, so what is our prediction? Definitely this zone will be violated. This is a 75-minute zone, but it's a real structure we are seeing at 15 minutes. We should find an excellent, a beautiful 15-minute zone inside this. But what we are seeing, instead of a 15 minutes time frame zone, we are seeing all the base candles, more than 6 base candles. Such kind of zones will be violated easily. So don't take trade in this zone next time when prices are entering into this. Easily this high liquidity zone will be violated. And the next one is Dalmia Bharat. We've been waiting for several days in this stock. A lot of order flow before this stock. Prices are reaching near and again they are going down. They are trying to reach, going down, trying to reach, going down, trying to reach, again going down. That means a huge order flow is there in this area just before the zone. Most of the time, such kind of zones are going to be successful the moment prices enter inside this zone. Mostly, we will get a good opportunity, good return they will give. So today also we didn't get an entry in this zone. And the next one is Tata Communication. Tata Communication also we didn't get any. This is a 75-minute zone. Sorry, Tata Communication also daily zone. See, Tata Communication, we have a daily high liquidity supply zone and also demand zone. Both are high liquidity zones. That's why the prices, see, they are moving within this area only for the last couple of weeks. They are moving here up and down. Previously, we got this trade few days back, probably some 3 or 4 days back, if I am not wrong. Not 3 or 4 days. It is almost 2 weeks back. 13 trading days back. It means almost 2 weeks back. I think this is one of the zone has given an opportunity during the intraday. That is buy opportunity a few days back. Okay, this is about Tata Communication. Prices are in between these two zones. We didn't get any entry. So there is nothing much to learn from this. And next one is Coforge. See how easily this zone is violated. I asked you in our Telegram group, what is going to happen to this zone? Look into the 75-minute zone. This is a 75-minute zone. We have a drop candle, 2 base candles, and we have a rally candle. And what we did, we went to 15 minutes time frame and fine-tuned this zone. Here we have a leg-in candle, it is ERC candle, and then you have 2 base candles, and then we have leg-out candle with a gap. It is looking like an excellent structure, right? Those who look into this structure, they don't want to miss this trade. At some point of time, it created that kind of impression. See here, the prices entered here and see the rejection. The reason is it is not because of institutional pending orders. People like us, the demand and supply zone traders, they felt those who trade by using 15 minutes time frame. I have seen people, they just look into the 15 minutes time frame and they place the orders. That's it. They don't even look into the structure of this zone properly, analyze. So all those people would have placed their orders. That's why it has given some rejection. But this is not able to push up to the next supply zone. See, just a rejection and after that again it came down. See how easily it is violated. Because institutions, they captured all these orders placed by the demand and supply zone traders. Why this zone is failed? What is the reason? That is the question I asked you. So you will understand if you go to one time frame below, then you will understand the real structure of this particular zone. So go to the 5 minutes time frame and look inside this zone. See the candles, how they are looking like. It looks like a drop candle, a base candle, and again a drop candle. It is looking like a what is that? A supply zone inside the demand zone. After that, this supply zone is broken with this candle. What kind of candle it is? It is a leg candle. See, we have a drop candle, we have a rally candle, and then we have another rally candle with huge leg out. Then where is the base candle? This leg candle violated this supply zone, a tiny supply zone. This candle is violated. When you have such kind of structure, actually it is a pivot. Pivots will be broken easily. That's why this price structure is not at all good. So that is the reason why I asked you the question. What is going to happen to this zone? Or why this zone is violated? And when we know this zone is going to be violated, the moment we looked into this 5 minute zone, we can easily tell this zone is going to be violated. So that is what happened here. The zone is violated easily. But see, after that, the move, the price, it has given an excellent move. See, it reached the demand zone 15 minutes. This is the first 15 minutes demand zone. This is the second 15 minutes demand zone. This is the third 15. That means it violated not demand zone, supply zone. It violated the first supply zone, violated the second supply zone, and finally reached the target of the third supply zone. The reason is a trap. Which trap? Bear trap. So below this zone, institutions kept a trap. See, there is a drop base rally. This is a very strong zone. This 15-minute zone. The prices entered into this actually two times. First it went wick to wick. It tested, moved up. And the second test, it went a little deep inside, that is type 2 entry. Maybe next time prices enter, probably this zone will be violated because the prices went more deep inside. But see the target of this bear trap. All the bears means short orders. All the short orders, because this zone is violated, all the demand and supply zone traders, their stop loss has hit, and whatever the orders, the stop losses, everything the institutions captured. And probably the breakout traders, because this zone is violated, they will be thinking prices will further go down. Probably they might have placed some of their orders here short orders. All the short orders are captured by the institutions. Once this order flow is completed, see how the prices moved up easily. So how many of us dare to take a trade like this? The moment this high liquidity zone is broken. We have seen several examples earlier also. Maybe 4 or 5 scenarios we have discussed earlier about this traps. I remember previously we discussed about bull traps, bear traps. You will see one more such kind of example. Next one is Voltas. Voltas is a 75-minute zone. So inside this 75 minutes, we have a fresh 15-minute zone. First, yeah. So this is a 15-minute zone like this. So we have a leg candle and then 4 base candles and we have a leg out. And what I did to minimize the risk, I went to the 5 minutes. So here we have a ERC candle. So this ERC candle is the failed ERC candle is the leg candle. And remaining all these small candles, 1, 2, 3, 4 candles are there. These are the base candles. After that we have a leg out. And today prices entered into this zone. And reached the target. So this is an excellent trade, Altus, because this is a fresh zone. First time prices entered into this zone. Because this is a 75 minutes time frame, we identified a 15 minutes. Inside 15 minutes, we fine tuned to 5 minutes level. And Voltas has given 3,660 rupees, which is 4.02% ROI, return on investment, on one as per one future slot, because we are calculating ROI as per one future slot. Of course, this is a little lower than our average 6.1% ROI, but still 4% is a very good during the intraday return. But after that, what happened? This zone is violated and further it moved up and it reached the next targets. It even reached the 75 minutes target. See, we have a drop, base, drop. So even this target it reached. Because such kind of opportunities we get rarely, but we can't, every time we can't look for such kind of opportunities. The moment it is reached 15 minutes, we have to exit because we never know what is going to happen after it entered into this 75 minutes area. 15 minutes area. Many times we have seen, again prices bounced back. The moment hit 75 minute zone, again prices came down. You will see one such kind of example today for the next stock. So Voltas is another successful trade as per our high liquidity zone strategy. And next one is a Maruti. Maruti also we got one successful trade. Maruti is also a 75-minute stock. First, let us get into the 75 minutes time frame. So this is the 75-minute zone. We have a ERC candle, failed ERC leg in, then 4 base candles, and then we have a leg out, and then follow through candle is there. And previously it has given several tests. This is the first test, this is the second test, and today it came third. And because previously some of these zones are tested, they were violated. They are not fresh. That you will see in the 15 minutes time frame. Let us go to the 15 minutes time frame, because inside 75 always we have to look for a 15 minutes time frame. Sorry. This is the one previously, a 15-minute zone inside this. So which is tested, and now it is no more a fresh zone, so it is violated. This one is the previously drawn. Then do we have any more fresh 15-minute zones here? No, we don't have a fresh 15-minute zone, because we can draw a zone here, but that is already pre-assed along back itself. Then do we have any other opportunities here? Yes, we have one 15-minute zone. This is a leg candle, and then we have a base candle, and then again we have a leg out candle, follow through candle, and another follow through candle. This is the 15. You can draw a zone like this, 15-minute zone. We have a failed ERC candle, which is a leg in, and then we have a base, and then we have a leg out. But what I did, I went one more, because as per our rule, always we go to one time frame below and we will observe the stocks, the structure of the zones. And here I noticed a zone like this. This is at 5 minutes level. And see how prices are respecting this zone. Keep on respecting. See, prices went and again came, again went, again came down, again I went, prices went up and again came here. So to bring clarity, let me delete even this entire 75-minute zone, so that you will understand much better way. Anyway, this 75-minute zone is violated today. Anyway, we have to delete. But even before that, let me show you. So this zone is acting like a high liquidity zone. And moreover, one more drop, base candle and rally candle is created. Something a zone like this. But what is the origin for this entire zone? This is the origin. This rally base. Because this is the origin, and we can consider one more fresh zone is created, because what we learned, High liquidity zones are having the ability to create a new zones within itself. Maybe one time frame lower or within the same time frame. This is like LOTL. But to minimize the risk, I was always waiting for an entry like this only. Now, moreover, this zone is a fresh zone. Drop, base, rally is a fresh zone. So, as per that, today, Wednesday at 9:15, prices entered into this zone. They moved up, again came close to this zone. If anybody missed an entry, probably you would have got when prices reach near to this. Generally, what we do, we add just 1 or 2 rupees, because this is a 10,000 stock, probably we will add some 10 rupees as a buffer before this, and we will take an entry. This is the first entry, prices reached into this zone. The second entry almost close to this. Today, I'm talking about today. And then it reached the target. How much profit it has given? 5,650 rupees, which is 6.14% return on the investment. Because the margin cost of the Maruti is very less. It is around 90,000 rupees only. But most of these stocks are around 1.5 lakh, close to 2 lakhs in between. But Maruti is less than 1 lakh. That's why even though the profit is 5,650 rupees, still it gave 6.14% return on the investment. Maybe if you would have purchased 2 lots, maybe our profit would have been looks like maybe above 11,000 rupees. But we are calculating, all these calculations are based on one futures lot. But how many lots you are going to buy, that is a different story. Got it? And today what happened, this high liquidity zone, 75 minutes high liquidity zone is broken. Next time again prices entered into this. You may ask a question, there is a possibility that we may take one more entry here, but that is violated. Yes, if you would have taken one more entry at this price, definitely you need to go for a stop loss. The moment it is violated, you need to exit because the stop loss is hit. But what happened here? Below this high liquidity zone, there is a bear trap. We have a rally candle, we have two base candles, and again we have another. This is not a drop candle because there is a hidden body. If you add the hidden body, the entire green color body, it looks like a rally candle. So rally, base, rally. I told you several times, all these hidden zones, institutions they create, most of the time they have higher success rate. This is not only a bear trap, but this zone is a hidden zone. Because the body is a hidden body, most of the people not aware of this hidden body and hidden zone concept, they will not consider this as a zone at all. But this is a zone. And this zone acted as a bear trap. See, the moment prices entered into this zone, see the rejection. We got another entry here. So once again prices reached the target. But today at the last candle of the day, it reached the target. But how many of us dare to take a trade? The moment your zone is violated, entire high liquidity zone is violated today. Not only this 5 minutes high liquidity zone, because this 5 minutes high liquidity is there inside the 75 minutes high liquidity. The moment a zone is violated, do we dare to take? Because what is our assumption? The zone is violated, all the stop losses will be triggered so that the prices will further go down. But most of the times institutions keep their traps below the high liquidity zones because they know where to put their traps. See how much the rejection, not only the rejection, it went up. Though I am not adding these traps in our list, I mean in our Excel sheet, but we have to consider because these bull traps and bear traps are not part of our HLQ strategy, high liquidity zone strategy. But it is a very important concept because they are not there inside the high liquidity zone. Only for learning purpose we are discussing, but I am not registering these trades in our Excel sheet. But otherwise it would have given another 6,000 rupees profit from here to this zone. So that's why learning these traps are very, very important, bull traps and bear traps. So this is another interesting learning. And next one is Ramco cement from our Monday's list. Why I am showing this? Because yesterday we discussed Ramco cement. I have shown you the fine-tuned zone. This is a daily zone. We've been waiting for prices to enter into this zone for a long time because this zone is very old zone from 2021. This is from 15th November 21. This zone is there. And even yesterday I shown you this 5-minute zone. Yesterday it was not displayed because in the 5 minutes there is no enough data yesterday. Because 2 weeks back, actually I'm sorry, I have to say apologies. Yesterday I think wrongly I pronounced, instead of saying 2 weeks I said 2 months. Actually we have drawn this zone 2 weeks back. So at the time 5 minutes data was there. Now the 5 minutes is having more than 20,000 candles starting from this day. Trading view is not displaying. Because that day we have fine tuned to 5 minutes level. This zone is available. And today, see the rejections before this zone. All these rejections are clues, price action clues. What kind of clues? Indicating that there is a high liquidity is there inside this. The moment prices enter into this 5 minutes area, definitely we get success. And recently also one more price action clue we got. This is the second clue. Now prices went a little up. And see today prices entered into this zone. The moment prices enter into this zone, see the rejection. Let me go to the 15 minutes time frame. See today at 9:30 candle, prices entered inside. And this is our target. What is our target? We have a drop, base, and then we have a rally. With the hidden body, there is a rally, and follow through candles continuously we have. But unfortunately what happened? Just 2 rupees before this zone, prices failed to reach. Next 2 rupees. If anybody sold just before 2 rupees before, you would have got very good profit. Generally what we do, because this is a 1,000 rupee stock, we keep mostly 1 rupee or 1.5 rupee maximum. Before that we will exit. So definitely narrowly we missed this profit booking. It didn't come. But what happened? A new demand zone is created. And then prices entered into that new demand zone, and this is our exit. That means the initial target we have to revise during the trading day today. Because always I say markets are dynamic. That's why our targets are not fixed. Most of the people say the supply demand zone price action is like set and forget. I don't believe on that statement. It is not set and forget. If it is set and forget, today prices did not narrowly miss your target. See, after that again prices went near to this zone. The entire profit, whatever the profit we have got, everything we would have missed. Because market is dynamic, what we did, we changed the moment a new 15-minute zone is created, we changed our target and the revised target prices reached. And from this entry till this revised target, we got a profit of 12,622 rupees, which is 7.99% return on the investment as per one future slot. That means almost 8% ROI we got. If this 2 rupees also price would have moved, we would have got another 4,600 rupees profit. Maybe totally we would have got over 17,000 profit we would have got on this stock. Yesterday only we discussed this. In yesterday video, during the analysis I explained about this video. See the fine-tuned 5 minutes area it reached and see how it gave a rejection and then pushed the prices. If anybody would have missed this, it has given one more opportunity, trading opportunity, short opportunity at 9:45, 15 minutes candle. And after that, in next two candles went down and came very close to the target. But anyway, revised target, we got 12,622 rupees with ROI, the return on the investment, ROI, as 7.99% per one futures lot. This is from yesterday's. And yesterday, one more stock I am showing you. It's not for the trading purpose, for the learning purpose about how a zone fail. This Bajaj Finance is a very classic example. This is, I can say it is, I really loved this example. Step by step it is clearly shown how a zone can be violated. This Bajaj Finance is a daily high liquidity zone. We have a rally, 4 base candles, and again we have a rally candle. And tested several times inside this zone. Now let me show you. 75 minutes also we have fine-tuned. Let me show you the 15 minutes and 5 minutes time frame level. This is the one we fine-tuned. See how many zones we have drawn here. 1, 2, this is 3. Okay, this is the target anyway, this is the target. But learning point of view, let us see. And even, let me go to 15 minutes to bring better clarity. Even we have one more 15 minutes, let me draw even this one, so that we really understand how a zone will fail. So inside daily high liquidity, we have drawn the first 15 minutes little above, the second one little above, the third one. And this zone is a target for our yesterday's trade. Let me delete this. See, all these are all fresh zones. The moment they created, the fresh zones. See, this is a fresh zone. See, next time when prices it is tested, that means already it is tested once. So it is no more a fresh zone. And again what happened? It created a new fresh zone. And again next time when prices entered into this, it gave another entry and gave a good profit. See, the first zone has given a very good profit after it tested this zone. See, very good profit. Again this fresh zone, next time when prices entered into this, see again it gave a very good profit. And this is the third one. This is the third one. See, this third one is also tested, but this test is proximal type 1 to proximal type 1, that is wick to wick. This is also tested. And see, after that the price has moved up to the supply zone. So yesterday we got entry in the supply zone and then reached the 15 minutes target. That is a different story. Yesterday we got a successful trade, that is short trade. But all these are all long trades. And each zone gave a successful trade. The moment it is tested, it gave a successful trade, but after that it is no more a fresh zone. And none of these zones are high liquidity zones. They are fresh 15-minute zones, but they are all inside 75 minutes high liquidity zone or a daily high liquidity zone. Now this is already tested. What is the lesson we learned? The tested zones will be violated mostly, most of the situations. So it is violated today. Hence proved the fresh zones, once a zone is tested, it will be violated. Not the high liquidity zone. The zones inside the high liquidity zones we are talking about. High liquidity zones always give multiple tests. See, this is the first test it gave. This is the second test it gave. Again, this is the third test it gave. This is the first one, second one, third one, fourth one. High liquidity zones always give. But inside the high liquidity zones, we are identifying the 75-minute zones or 15-minute zones, and they should be fresh zones. You should not forget that point. That is the reason why high liquidity zones we are using as a HTF zones. We are not using high liquidity zones as a LTF zones. You should not forget that point. Okay. So because it is tested, let us delete. So it is violated. Because it is tested, it is violated. So it is a classic example that demonstrates mostly tested zones inside the high liquidity zones will be violated. And moreover, these zones, none of these 15-minute zones are high liquidity zones. They are only normal zones, but they are inside the high liquidity zone. So we deleted. Okay, now this newly created zone, is it tested here? Yes. That means it is no more a fresh zone. But that first test, has it been a successful test? Yes. The price has moved from here up. Okay, because it is a fresh zone, it is not no more a fresh zone. See today, this zone is also easily violated. Now let us delete this. Now look into this third one, the last one. See, the time when it is created, it is a fresh zone. Next time when prices enter into this zone, is it a successful trade? Yes, because the fresh zones inside the high liquidity zones always a successful. Most of the times they will be a successful trades unless the structure is not good inside this zone. So it is a successful and gave a very good return. Now next time, that is today, it reached. Because it is no more a fresh zone, is it easily violated? Yes. And that way, this entire high liquidity zone is violated. Because this high liquidity zone is not having no more fresh zones inside. So now this entire high liquidity zone is violated. The moment it is violated, we can delete this zone. So what is the lesson we learned? This is a classic example that demonstrated a high liquidity zone supported multiple tests, but the zones inside the fine-tuned, the 15-minute zones inside the 75-minute zone, the fine-tuned 15-minute zones are not fresh zones, they are violated. But if they are fresh zones, the first test they have given successful. Why it is successful? Because the zone is inside the high liquidity zone. A fresh zone inside the high liquidity zone always gives successful. Which fresh zone? The immediate next level. That is the point we should not forget. The immediate next level. The 75 minutes high liquidity zone, the immediate next level is 15 minutes level. If it is a daily zone, the immediate next level is 75 minutes zone. That is the way we need to understand. So this is a very good example. So those people who are not aware about when a zone fail, probably today's lesson is going to be a very good lesson, because we have seen different situations. In one situation, if zone is not fresh inside high liquidity, it is failed. In another situation, zone is fresh, still it is failed. The reason is the structure of that particular prices inside that. Say for example, if it is a 15-minute zone, excellent structure, but the moment you get into 5 minutes, the structure is very ugly. That means not a good structure. Similarly, 75 minutes inside daily, we have a 75 minutes, we have an excellent structure. But the moment you go one more time frame below, that is 15 minutes, the structure is not at all good. That indicated the zone will fail. That way the zone is failed. That's why don't get cheated by looking into higher time frames by seeing the always go to the lower time frames. Lower time frame means like 15 minutes time frame or 5 minutes time frame. If you get into that level, you will be able to understand. So this is about the analysis part of all our trades from our yesterday's list, and a couple of stocks we have seen even from Monday's list. One is a successful trade, Ramco Cement, and Bajaj Finance we used to demonstrate how a zone is going to fail. Now let us generate demand and supply zones for different time frames. Let us generate demand and supply zones for the daily time frame. Entry time frame is daily. Let us find the stocks which are near to the daily demand zone. And this is the filtered list. 3 stocks are identified. And we have 2 high liquidity zones. One is AU Bank. This is a high liquidity daily demand zone, and ICICI Prudential is also high liquidity demand zone, but it is already tested once. AU Bank is a fresh zone. Now let's go back. Entry time frame is daily. Let us find the stocks which are near to the daily supply zone. 15 supply zones are filtered. Let us look into the high liquidity supply zones. Biocon is a high liquidity supply zone, fresh zone. And Canfin Home, I think we already discussed this stock today. And Dalmia Bharat, we've been waiting prices to enter into this zone. And next one is GMR Infra. It is already tested 4 times. And we have Sriram Finance. This is a counter trend setup stock, fresh zone. And the last one is Sun TV. This is already tested 2 times. So you can look into these high liquidity zones. Always remember the strategy is very simple. You have to go to, if it is a daily, you have to go to 75 minutes. There you need to find a fresh 75-minute zone. Inside you can fine tune to 15 minutes and 5 minutes level. So this is about daily stocks near daily demand and supply zones. Let's go back. Entry time frame is daily. Let us find the stocks which are closed inside daily demand zone. So this is the filtered list. So total 20 stocks are closed inside daily demand zone. Let's go back. Entry time frame is daily. Let us find the stocks which are closed inside daily supply zone. This is the filtered list. So many stocks are there closed closed inside the daily supply zone. So total 42 stocks are filtered. So let's go back. Entry time frame is daily. Let us find the tested daily demand zones. So today these 16 stocks are tested. Let's go back. Entry time frame is daily. Let us find the tested daily supply zones. So these 4 supply zones are tested. So let's go back. For entry time frame daily, let us find the stocks having newly created demand zones. These 15 stocks are having newly created daily demand zones. So let's go back. Entry time frame is daily. Let us find the stocks having newly created supply zones. So these 3 stocks are having newly created supply zones. Even Infosys, a new supply zone is created. Nifty IT sector, a new supply zone is created. So let's go back. Yeah, now we have generated demand and supply zones near the, for the daily time frame. Now let us generate demand and supply zones for all the stocks for the reference purpose. Entry time frame is daily. I have generated the complete list. First 17 in this list are indices and remaining all are equity stocks listed in F&O segment. So I keep on scrolling this list down. Whichever the stock you want to refer, there you please pause the video and then you can study the stocks. So this is the complete list for the daily time frame. Now let us generate demand and supply zones for all the time frames. Stocks near demand and supply zones, starting from yearly. So I'm selecting the yearly time frame. Let us find the stocks near yearly demand zone. So no stocks are there. For yearly time frame, let us find the stocks near yearly supply zone. So no stocks are identified. Now for half yearly time frame, let us find the stocks near half yearly demand zone. So one stock is near half yearly demand zone. Let's go back. Entry time frame is half yearly. Let us find the stocks near half yearly supply zone. So one stock is near half yearly supply zone. Let's go back. Entry time frame is quarterly. Let us find stocks near quarterly demand zone. So these 2 stocks are identified. Let's go back. Entry time frame is quarterly. Let us find the stocks near quarterly supply zone. So one stock is filtered. So let's go back. Entry time frame is monthly. Let us find the stocks near monthly demand zone. So 3 stocks are there near monthly demand zone. Let's go back. Entry time frame is monthly. Let us find the stocks near monthly supply zone. So these 2 stocks are having their price is near monthly supply zone. Let's go back. Now weekly time frame. Let us find the stocks near weekly demand zone. Only one stock is filtered. Let's go back. Entry time frame is weekly. Let us find the stocks near weekly supply zone. So 3 stocks are filtered which are near weekly supply zone. Let's go back. And daily time frame we have already generated. So 125 minutes. Let us select 125 minutes. Entry time frame 125 minutes. Let us find the stocks near 125 minutes demand zone. These 8 stocks are near 125 minutes demand zone. Let's go back. For 125 minutes time frame, let us find the stocks near 125 minutes supply zone. These 14 stocks are near 125 minutes supply zone. Let's go back. Let us select 75 minutes time frame. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes demand zone. So these 9 stocks are near 75 minutes demand zone. We have few high liquidity zones. Yeah, Axis Bank is there, which is already tested 4 times. And then we have Balram Chin is already tested 3 times. And the Naveen Floor, it is a fresh zone. And then we have Oberoi Reality, it is already tested 4 times. So let's go back. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes supply zone. So 6 stocks are filtered. Britannia is there, high liquidity supply zone. Cummins India is a high liquidity supply zone, a fresh zone. Deepak Nitrate, no, we don't look into this TCO because they are low probability high liquidity zones. And moreover, you should have idea about confirmation trading to understand this concept. So we have only those 2 stocks, high liquidity zones. So let's go back. Now let us generate reports for 25 minutes time frame. Entry time frame is 25 minutes. Let us find the stocks near 25 minutes demand zone. These 6 stocks are filtered. So let's go back. Entry time frame is 25 minutes. So let us find the stocks near 25 minutes supply zone. So these 10 stocks are filtered. Let's go back. Entry time frame is 15 minutes. Let us find the stocks near 15 minutes demand zone. These 8 stocks are filtered. So let's go back. Entry time frame is 15 minutes. Let us find the stocks near 15 minutes supply zone. So these 7 stocks are near 15 minutes supply zone. So let's go back. Entry time frame is 5 minutes. Let us find the stocks near 5 minutes demand zone. So these 9 stocks are filtered. Let's go back. Entry time frame is 5 minutes. Let us find the stocks which are near to the 5 minute supply zone. So these 6 stocks are filtered. So this is the total list of the stocks near demand and supply zones for all the time frames. I hope this information is useful to you for your further study and analysis. Let us all meet again in our next video. Thank you.